All right, welcome back to Two Super Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And with all the kind of attention these days about like inflation in the news and all that sort of stuff, so I wanted to run through a couple of different stocks and kind of give you some thoughts on like ways you could invest to help shore up your portfolio a little bit.
Exactly.
And also, kind of really basically, should you invest if you're really that worried about inflation? Or should you just grab like a combat helmet and start digging a trench in your yard and just get ready that way?
That sounds like a you thing.
Me thing? I don't know. That definitely some people that have commented on our previous videos have felt that way. All right. So, right, this has been the headline this week, right, Dylan? You saw all these numbers about like CPI being up 4% year over year in April.
Yeah.
PPI was also up. I forget exactly the number on there. I think it was even larger.
I believe it was. Yeah, it was larger.
Yeah, exactly.
The biggest one was 3, I thought, number 3.
Yeah. Interesting.
Well, it's, because everyone remembers the giant crash, 2008. So you have the increase, the annual from CPI was the fastest since 2008. Everyone associates, oh man, 2008. And then, the monthly gain in core inflation was the largest since 1981. Also, this was projected, and it's also not projected to like get worse and worse and worse. It's not like a journey thing.
Yeah, I know the Fed keeps saying they think this is going to be like a little transitory thing where, demand is ramped up, but like, production really hasn't quite caught up yet. And they think as production meets demand, then inflation will kind of subside and we'll go back to the previous kind of like more normal baseline. We'll see. We'll find out over the next couple of months if that becomes true. I definitely have seen, anecdotally some evidence of inflation locally, like at least in my purchasing or requests, I guess you could say. As Dylan was kind of talking about, this is the reason why you're seeing these little bit of a correction here, and it's much more dramatic amongst the Qs than it was than from the SPOI, right? Because when you're talking about the Qs, you're talking about technology-oriented companies. Technology-oriented companies, sometimes they trade at higher multiples, meaning you pay me more today for more money like down the road. It's kind of a different trade-off there, I guess you could say. And when you're having this trade-off where you're paying up front for more, future earnings, then it changes your math in terms of what sort of, kind of return on your money you're expecting, right?
Yeah. The one on the SPY is, if anything, a healthy correction. Like you can't go up forever. So it wasn't anything crazy.
Yeah, exactly. But in the same vein, too, when we're talking about companies that are better suited to be, protect you against inflation, we're going to talk about companies that are more like the traditional SPY kind of oriented companies. And, this was an interesting graph I actually grabbed from an article where they were talking about, whether or not you should be invested basically in stocks during a time of, I want to say quite hyperinflation, but large levels of inflation. So this is looking at the Argentinian stock market in U.S. dollars, right? With kind of one being baseline here, right? So you started at 100% of your portfolio. At the end of this kind of inflationary kind of period, which actually is still ongoing, you were down 24% in real American dollars.
Okay.
Comparison, right? Do you know how much the currency was down in this period of time compared to the U.S. dollar?
More?
Yeah, 74%.
74%?
Yeah. So the stocks outperformed just holding cash by about 50%.
Well, I mean, in my portfolio with my growth stocks, I've been personally down 74% multiple times. So it's just kind of and they come right back up. So.
Yeah. I mean, I don't think dollars or currencies tend to do that quite as often, but sure.
Well, cryptocurrencies do. So
yeah, cryptocurrencies do for sure. See our upcoming video on SafeMoon. So this chart is, we've used this a few times, but it's a great chart where you're looking at what like kind of an actual net return, the company that will produce return above what the kind of above the inflation, what I'm saying? So like, are you actually gaining dollars in a relative cost, kind of basis? Like, does your money buy more goods? you know, and also then this also kind of looks at how likely that is to happen. So anything above this line right here is producing real returns above this line. Anything on this kind of side over here is more likely than not to have that happen. So obviously the best quarter or kind of quartile to be in here is going to be this upper outer quadrant. Right. And energy is by far and away the best. They have the highest likelihood of outperforming. They have and they produce the greatest amount of real returns. All right, you're going to see that kind of shade our little analysis here. Consumer staples, not a bad industry as well to be in. You're going to produce returns more likely than not. And then if you're looking at just like what's the a maybe closer to 50-50 shot of producing real returns, but if they do produce returns, they're going to be pretty decent sized. You're looking at precious metals and mining, right?
X, baby.
X, yeah. I was say we got one coming up for you. So Chevron Corporation, pretty obvious play here. Energy, as you can see, this trade has been well thought out. A lot of people kind of know you're not going to be an early adopter to this whole trend. As you can see, it's been going up here for 6 months or so now. But if this is indeed true, these are one of the bastions to hide in and get real returns. A little kind of brief financial data. I looked over the forward PE, looked at the consensus analyst rating, and then looked at what the consensus analyst price target was. And we got Dylan added in the dividend yield here. So forward PE of 20, higher than the classic S&P 500, average of about 15 or so, but not unreasonable given this kind of current market. That's still lower than like Apple's PE, say, much lower than Amazon's PE or Tesla's. Consensus analyst rating was a buy and $125 a share price target. And this 4.84% dividend yields is pretty juicy. It's nice to get a nice 5% or so back on your money. In addition to like some capital appreciation, because as you can kind of see, you're looking at it, still another $20 or so a share up from where the stock is currently trading based on the analyst expectations.
That's actually, it's a really nice moving stock because I mean, if you look at it, it's up like 20% over the last 4 months.
Yeah.
So you do that with the dividend too. I mean,
yeah,
it's pretty solid.
Yeah, it's pretty solid. Another one I can kind of consider here is BP. The big oil giant. They've had kind of a little regress, I guess you could say, after the whole Texas incident back. I forget what year that was, but they still haven't really fully recovered.
Oh yeah, that produced the greatest South Park episode ever, by the way.
Oh, good to know. Better than the COVID special.
Yes, in my opinion.
But yeah, another stock on like a decent uptrend for the last 6 months or so here. Like I said, these oil giants are definitely getting some attention, reasonably so. If you look at it actually on a PE basis, you're getting a better discount with BP. I think it's a little bit better buy at this point than Chevron is. Yeah, exactly. And that even juicier dividend yield at 6%, which is pretty nice.
It is an ADR, which is
yeah. See our Alibaba analysis video. Another kind of industry you can play in order to help protect you from inflation a little bit is consumer staples. No matter what happens with the economy, people are still going to be buying some of their basic core products. This is Kraft Heinz Corporation, maker of Velveeta cheese and I think Hormel chilies and Planters peanuts and a whole
ketchup.
Yeah. Oh, ketchup. I mean, I love ketchup. Kraft is the only one.
Have you ever bought like store brand ketchup?
Yeah, it's just not the same.
It's disgusting.
Yeah, it's amazing. Or like you go to a restaurant sometimes and they have that house recipe like ketchup.
Just sucks.
Yeah. I know, but you know what? That's what's going to happen. It's like if the economy goes into this hyperinflation state, I'm going to still be buying my Kraft macaroni and cheese.
Exactly.
Yeah. Maybe I'll throw a little Hormel chili on it too.
It's like that conversation with Bill Gates and Warren Buffett. He's trying to get him to invest in tech, and he's like, "Are people still going to chew bubblegum in the future?
Yeah.
I'll just invest in bubblegum."
Yeah, it's fine. Exactly. Pretty decent in terms of like their financials. Still, forward PE of 17. Analyst rating was a hold. $42 price target. I think it's overrun its price target a little bit. This is the average price target based on, I forget exactly how many analysts, but you're getting a 3.65% dividend yield, which is not bad.
It's respectable.
Yeah, pretty large, stable company here. 3.65% will buy you a fair amount of ketchup.
Absolutely. And when you buy the ketchup, you're, helping the stock price.
Yeah, it's beautiful. Beautiful circle. Speaking of consumer staples, this is a little PepsiCo. I personally am a Diet Mountain Dew drinker. So, this stock and me kind of go together like raisins and Kit Kats,
Do you guys go together?
No, not at all. I'm just being a clown. But no, the
that's disgusting.
Yeah, I know. I agree. Pepsi itself is also disgusting, but Mountain Dew is delicious. Okay.
So hold on. So I'm a soda. I'm an amateur here. Does Pepsi own Mountain Dew?
Yeah, they do.
So you're going against Coke on this one.
I love Coke, but Mountain Dew is better than Coke.
But in terms of stock picks for inflation, we're going against the big KO.
No, there's nothing wrong with Coke. I just thought Pepsi represented a better value. The other thing with Pepsi is that they have the Frito-Lay business.
Yeah, that is honestly the best part of Pepsi.
Yeah, I mean, have you been to a barbecue that didn't have Doritos?
No.
Exactly. If you find yourself at a barbecue that doesn't have Doritos, just leave. No.
Probably a good call.
Delete the phone number. Those people aren't friends of yours. Okay?
Wait a minute. I went to a barbecue of yours. You didn't have Doritos.
I definitely did. Definitely did.
Oh, yeah. Okay.
But forward B 24, a little bit more expensive than the other companies, but we've looked at so far. But you're still buying a good business here, I think, at this price, and getting this 2.79% dividend yield, which is it's fair. Think of it as every little like can of soda sold out there, you get a tiny little bit back. And then this is kind of one of my favorites, actually. Freeport-McMoRan. I own a tiny bit of this company. I actually traded them back in like 2009 after the major financial kind of Great Recession or whatever they call it, and made a significant amount of money. This is like a beautiful stock chart, isn't it?
Yeah, this is talk about stocks going to the moon, man. This is a 400% return over a 12-month period.
Yeah. The scary part, though, is like 1 second right here. They're still talking about a 4P of 15. Yeah. And that's at current copper prices.
Oh, man. All right. I'll invest Monday.
Yeah. Goldman Sachs came out and said that they think copper reasonably could increase 50 to 100% over the next year in terms of the actual mineral price. And Freeport-McMoRan is a terrific company to be kind of a lever up on that. Not only do they produce copper, they're the largest publicly traded copper company in the world, but they also mine, I think it was over 300,000 ounces of gold per year as well. And if you're seeing an inflationary environment and people are kind of trending towards gold, this is another way to profit from that kind of gold, kind of drive there, I guess you could say.
Oh, that's pretty awesome.
Yeah. I mean,
50 to 100% increase, and oh man.
Yeah, I was talking to Dylan. I got to look at the updated numbers because this is a couple years old. But it was like at the time, I was trading at Freeport-McMoRan. Each new home built in the United States had over 400 pounds of copper in it. And as you can kind of tell just from driving down the street, they're building homes left and right. So the demand from copper is from that aspect is enormous. Motor vehicles has never been more computerized, right? And all that copper wiring within the computers, within the cars themselves, is another driver for copper price. Copper really ultimately is the basis of modern society in a lot of ways, in terms of base core materials that go into like producing these assets of modern life.
Yeah, that's pretty wild.
Yeah, exactly. So I thought it was a good opportunity to make some money there. I'm probably going to increase my position, I think, a little bit in Freeport-McMoRan over the next few days.
I'll buy some of that. I like BP.
Yeah, I agree.
I think BP was my favorite out of BP and Chevron.
Yeah, BP definitely seems like they offer the better value right now. Do a little bit more due diligence on the company itself, and I got to find out what portion of the revenue is derived from sources outside the United States, because it's another kind of hedge if you're looking at inflation is being diversified amongst your currencies, and when the company derives much of their revenue from multiple different countries, that's the way to do that.
Right.
Yeah. All right. Well, thanks for tuning in, guys. We'll catch you guys in the next one.
Have a good one.